Welcome to the Fintech One-on-One podcast. This is Peter Renton, Chairman and co-founder of Fintech Nexus. I've been doing these shows since 2013, which makes this the longest-running one-on-one interview show in all of fintech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, Pitch It, the Fintech Startups podcast with Todd Anderson, and Fintech Coffee Break with Isabel Castro. Or you can listen to everything we produce by subscribing to the Fintech Nexus podcast channel. Before we get started, I want to talk about our flagship event, Fintech Nexus USA, happening in New York City on May 10th and 11th. The world of finance continues to change at a rapid pace, but we will be separating the wheat from the chaff, covering only the most important topics for you over 2 action-packed days. More than 10,000 one-on-one meetings will take place, and the biggest names in fintech will be on our keynote stage. You know you need to be there, so go ahead and register at fintechnexus.com and use the discount code PODCAST for 15% off. Today on the show, I'm delighted to welcome back Pankaj, also known as PK. He is the CEO and founder of Scienaptic, and we're talking all about AI in lending, and we cover a lot of territory in this show. We obviously talk about what has changed at Scienaptic over the last couple of years since we had him on. We talk about how lenders are using AI in underwriting today. We talk about any resistance that is there from when it comes to using AI. We talk about automation. We talk about the experience for these lenders, for these credit unions, how they're implementing this sophisticated system. We talk about the different verticals they operate in. We talk about fair lending, because that's a really hot topic these days, and Pankaj has some very interesting things to say there. We also talk about ChatGPT and the future of AI and much more. It was a fascinating discussion. Hope you enjoy the show. Welcome back to the podcast, Pankaj.
Thanks for having me again, Peter. Great to be talking again.
My pleasure. It's been a couple of years since you've been on, and obviously the industry keeps marching forward. Let's kick it off by just telling the listeners a little bit about just Scienaptic, what's been happening over the last couple of years, and how do you describe yourself today?
No, I think we have had more than our fair share of happening, and mostly in the good direction. So
that's good
happy
to hear.
happy to be at this place. Absolutely. But really, very simply speaking, Peter, what we do is we are in the business of providing the best possible customer management and underwriting signal to a large number of lenders that we have in the US, somewhere over 12,000 people. And what we do enables them to use a lot more richer data than they are currently using. It also enables them to use cutting-edge algorithm, all embedded in a seamless way at the back of the technology that they work from, that we are providing. So that's what we do. But if you think about what has changed, when I was having that podcast with you about a couple of years ago, we were evangelizing this area, and we had a few customers, and it was going quite well, but it was still a lot of what we were trying to foresee, really. And now we have like over 125 customers, adding customers by the day. It's very clear that customers are seeing a huge amount of value using Scienaptic platform. And in fact, as I had gone around the country meeting several of our customers over the last few weeks, everyone is actually asking for more. They're saying, how can AI help us with now, manage the customer lifecycle a lot more effectively in terms of either cross-selling them some stuff or keeping track of any stresses that might be developing and so forth. So it's hugely exciting and a lot more active field that we are working with now.
Right. Okay, so when you're in front of your customers here, how do you describe what you're doing? Particularly, I'm interested in the AI piece, obviously. So maybe you could describe how you're using AI in underwriting today, and how do you differentiate yourself from others in the space?
I think, especially when I'm talking to potential clients, financial institutions, credit unions, auto lenders, banks, and so forth, Obviously, AI is interesting and you get a conversation in because we are actually doing real deal AI and we can talk a little bit more about it later on. But what I emphasize is what the system will do, what our platform will do for them
Mm-hmm.
effectively. In terms of outcomes, basically what we deliver is a couple of things. They start having the ability to underwrite more loans and approve more customers without increasing the risk, really. So we see typically our clients get anywhere from 20 to 40% increase in approval rates when they start using our platform. And the second thing that happens as a fringe benefit is that there is a large amount of automation that happens. Most of our clients currently basically look at every loan application, and that takes a little bit of time. With our technology, they can automate like 50 to 85% of the decision through the platform.
Mm-hmm. Okay. Do you like de-emphasize AI or do you emphasize it? Just curious because, there's been there traditionally was resistance to using AI here. I think there's a lot more awareness of it now, but how much do you emphasize the AI component?
I think we were emphasizing the AI component a couple of years ago, even when we were talking about it. And at the time, we used to talk about explainability of AI.
Right. Right.
Fortunately, the system has moved on now, and nobody is asking those questions because we have kind of put it through examinations. We have done a whole lot of work in terms of model validations and so forth,
Right.
because of which now there is a relative comfort that that is not the issue really. So one, that part has moved on. In terms of how we use and how much or how little AI we use is pretty much everywhere AI will be there. I think our clients also like to think that they're working with a cutting edge piece of technology, which they actually are really, unlike in many cases where, there is just AI is used and while actually what people are doing is really age old way of doing things really. What Scienaptic does is definitely a new way of doing it. There is definitely a core new algorithmic stuff that is embedded at the back of our platform that is powerful AI. But we are practical about it really in most situations, Peter. We like it to the extent our clients like to leverage it and they like to kind of say, okay, we are using AI. We also emphasize that component. But my pitch particularly tend to be more focused on here is what you're going to see in terms of portfolio improvements on your lending portfolio, or here are the changes you are going to see with respect to your member experience. Those are the two things I generally focus on.
And what about the automation piece? I see your announcements that come out where you have regularly signing on new credit unions. Oftentimes these are not very large lenders, and I imagine that they don't have very large staff in place. So is the automation piece, is that embraced? I mean, because I imagine they've gone from doing it, do they go from doing it relatively in a manual process to you guys, which is, it's not just one or two steps up, but it's a completely different way of doing it. So is that something that these credit unions and other lenders are looking for?
It's massively important to them because it's a very tangible and very immediate benefit that starts happening, right? So if you start thinking about it, they have an underwriting team that is working through the week. They have to go home, for example, on a Friday evening, a deal comes on table. Nobody these days will wait for the Monday,
right?
And wait for you to get back on the deal. The fact that you have a platform that can actually take over is very powerful to their business strategy and their member experience, really. So it is definitely core to their experience. In terms of how we migrate clients to that, we take a very empathetic approach, Peter, because we realize this is a massive change. Change is hard for human beings, definitely for organizations. I think what we do is we say, okay, guys, let's sit down together and say, this platform can automate lending 100%, basically. It can, over time, replicate everything that you think should be done and more in terms of whatever our data and algorithms are able to extract from the historic experience on our own. We can combine both of those things and give you a system that can completely automate the whole thing. But that's not necessarily the right thing from a change management perspective for the organization. So what are you comfortable with? Why don't we go from like 10% automated decisions right now to say like 50% in the first step and so forth? So we kind of work with them and tune in or dial in or out depending on what is their appetite and what is right for them.
Right, right. And then what about the human touch? And I've heard you talk about this before, but I'd love to get your take on it now. You just say that particularly credit unions pride themselves on the human touch. That's sort of one of their unique, selling points that for many or most, I would say, with this increased automation, how do you kind of think about the human touch? How can lenders still maintain that?
Frankly, human touch can actually only increase because the trade-off is this. Trade-off is, do you want to spend 5 minutes on 100 applications in a day, or you want to spend 10 to 15 minutes on 20 applications or something like that? Really. That's the trade-off, really, right?
Right.
If you are doing 100 applications in a day, looking at it very, very quickly, as a human being, we get tired. The underlying technology that we have, algorithms don't get tired, right? They're designed to not get tired, to not get irritated, to not let the biases creep in because I'm under pressure and I haven't had my cup of coffee or even the pee break for some time, really, right? So those kind of things actually, it really enables human beings to actually do the right thing for their members. Right now, frankly, if you were to see the workload of a underwriter sitting there, in all probability, they're not even talking to the customer. There is an intermediary in between that is negotiating with the customer, and they're basically just kind of quickly going through a whole lot of information. So
Right.
I really think that it frees up the time for them to actually become empathetic to the customer and actually prompt them for data that will help them make a yes decision for this customer.
Interesting, interesting. As I've mentioned, I've seen you focus on credit unions a lot. It seems like when I see your announcements come through, there's on a regular basis, there's a new credit union signing up. Did you just sort of stumble into that, or why the focus on credit unions specifically?
The focus on credit unions is only because I'm really surprised with the rate of adoption that they have. Our platform is very generic. It will work for all kinds of lending in financial services space.
Mm-hmm.
All kinds of unsecured lending, basically, operations will be supported by our platform anywhere globally, frankly. But in the US, the credit unions are seeing massive level of adoption, and they are in fact pulling us. And we, because of that, we haven't had the resources basically and the energy to spend elsewhere, basically, where if you're working with bigger banks and so forth, the cycle times of those decisions tend to be longer.
Right.
Oftentimes they have competing internal kind of initiatives that kind of, because of which it takes time for them to figure out what they want from you and so forth. So we'll get to those other folks at some point in time. Right now, there's just so much going on with the credit unions, and I'm just delighted. And another thing I would just say, Peter, I'm a big fan of what credit unions do in the market, really.
Right.
I saw a bunch of our customers in Wyoming and Colorado and Washington State and so forth. And really, what they're doing for their customers and the empathy that they have is very powerful. And I think our mission at Scienaptic is, and personally, frankly, it energizes me that we are bringing very cutting edge capability to people who are trying to do good and improve the communities that they are in. And I
Right.
would like to put the tools, basically, which some of the bigger institutions spend hundreds of millions of dollars every year in building. We actually are able to bring that capability into these communities by working with our credit union partners. So I'm very proud of our work with credit unions.
Right. Right. So when you're talking with these credit unions, what are they looking for most? Are they looking for automation? Are they looking for speed? Are they looking to increase their credit box? I mean, when it comes to their underwriting, what are they telling you that this is the most important thing?
Here is the thing. Let me frame it slightly differently. The credit unions have large amount of deposits that have been growing quite substantially. Their delinquencies are still very, very low compared to average lenders in the similar product space, actually, if you were to look at, which essentially means that they can lend a lot more and increase the yield for their portfolios. And because these credit unions are also focused on the communities, if they increase their yield, their services to their customers actually improve, their members actually improve. They're able to offer them lower prices for the loan products, and they're probably able to offer them higher prices on the deposit products, really.
Mm.
So essentially, what we are helping them solve for and what they most often get hooked to is saying, we'll be able to lend more because this capability that Scienaptic is bringing in is a lot more advanced risk management underwriting capability. But using that, they're typically targeting to grow faster without increasing risk.
Okay. Okay. Interesting. So then Do these credit unions, I mean, obviously everyone has a website. I mean, some probably would have an app, but probably not all. Are you replacing anything, or is this most of them, I imagine it's their first foray into this type of sophisticated underwriting, right?
That is correct. And we have tried to keep it very, very easy, Peter, for these folks. What we have done is we have done integrations with their loan originations platforms in the background. And with those integrations, we really are just an add-on piece of technology in their world. So think of us as a bolt-on technology platform that basically is in the business of augmenting the intelligence of the signals that they're getting. So right now they are doing it in a certain way. We get into that on top of that system and suck in the data and basically augment the data, create a signal out of that in the specific context of a particular credit union and send it back. So we don't affect the workflow and how the actual interaction that this credit union has with its members. We just add intelligence into it. So that keeps it simple to operate and easy to implement for these credit unions.
Do you need them to collect more data or different data? Because I imagine they at least have an online form, right, for filling out an application. Do you get into that level of detail with them where you're looking and saying, right, this would be great if you could add these three fields into your application? Or do you just literally work with what they have?
We'll start working with what they have in the first instance. Just to your specific question, typically we are now in a time, Peter, where people are very reluctant to provide more and more inputs that they have to key in. As consumers, right, we are all getting used to it. We are like, why are you not able to pull out my information from here? I'll give you permission and so forth. Right. So what we do is we rely more on, we have a bunch of partnerships we have built out with the data providers in the background, using which, just based on this identifier information, we will go back to all of those or some of those providers, depending on the context of this credit union and the product and the customer, and pull out additional data, augment this application information that is coming in through the system already, and then crunch it and send the signal back. That's the way it works.
Right. Gotcha. Okay. So the borrower experience, may stay exactly the same. The borrower may have no idea that anything's changed, right? Other than the speed, maybe.
So they'll get a faster response. Hopefully they'll feel that, as an individual, obviously they won't feel that, but at an overall level, many more of them will get yeses instead of declines.
Right. Gotcha. Okay. So then are these mainly auto loans for credit unions? I know that's a big focus. I mean, personal loans, like unsecured personal. I mean, I know on your website you talk about small business, but I imagine that's not a huge focus for credit unions. But I mean, maybe you can tell about what types of loans that you're working with here.
Primarily auto loans, unsecured personal loans, credit cards, some cases HELOC, but other than all kinds of unsecured lending other than mortgages is what we are currently focused on. We do a good bit of work on SMB lending as well, Peter, which is on the lower end of the size of the ticket, really. So for example, right, loans, small business loans up to $100,000 or so forth. That's another space where there is a lot of broken technology. It's again very expensive. The current underwriting process is very expensive and time consuming. So there is a lot to be done in that space with our technology as well.
Right. Gotcha. Okay. So then, you did touch on this, but I want to just tease it out a little bit more if I could. Someone wants to come and deploy Scienaptic into their credit union or community bank or whatever. What sort of expertise do they need to actually get this done? And I imagine you've done a lot. You said you've got 125 or whatever. You've done a lot of implementations now. If the credit unions listen to this and they think, oh, this might sound interesting, but I don't know if I have the capability to even understand what's going on here. What do you work with? What are the capabilities they need?
So we have tried to really keep it very simple to the point I was making, because this is a fancy new technology. It's difficult to understand when we talk about the AI part of it. We wanted to make sure that from a tech perspective, there is no additional challenge. So once people are over the hump of saying they're going to use these new age algorithms, AI and stuff like that, everything we have tried to keep it very, very simple for them to implement, which essentially means that we have these integrations that are built out with the loan origination systems provider. They switch on the integration, and really once they switch it on, all that we ask the customers to do is to do a bit of testing. So the clients will go ahead and do the testing once we have actually deployed this integration for them. So that's the extent of involvement that they need to have from a technical perspective.
Right, right. I want to ask about fair lending because there's been quite a bit of talk about that in the last few months. As you said, explainability was a hot topic 3 or 4 years ago. It feels like fair lending is the hot topic when it comes to AI and underwriting these days. So how do you ensure that your models remain free of bias?
So, Peter, several answers to this, really, right? Several types of answers to this broad question. From day one, when we built the platform 5-6 years ago, when we launched it, we have been obsessed about that. I had probably, mentioned in our earlier podcast, my background is I've been a chief risk officer in a lending business myself, really.
Mm-hmm.
So I'm deeply aware about the issues. And my quest it is to make sure that I give very safe system to people as a fellow practitioner to them. So really, from day one, we were compliant. We had built models in the right way. If you see what goes into this, really, there are a few things that are going on. There is certain kind of data going on. If you use certain kind of data sources, data elements, then you are at the higher risk of redlining the protected classes like gender and age and race and things like that. Obviously, we have enough experience because of which we'll not use those type of variables or proxies of those kind of variables. There is a good statistical process that is followed for doing that. The bigger issue, frankly, Peter, in this whole bias discussion is actually we don't realize how biased the current system actually is right now, right? And you and I feel that. I think, again, I would have given this example last time we were chatting. But for example, my utilization going higher is a very big indicator of risk. And my scores jump up and down very dramatically currently because of that. Mm-hmm. Now, you're sitting in Wyoming area as in operating in a certain employment generation area. You can have a lot of customers that actually take very little amount of credit, that have just one credit line. And once in a while, they use that credit. Even if they are late in paying once in a while by a few days, they come back because they're sincere, well-meaning folk that want to actually use credit only for the purpose of building, a good life, really. Mm-hmm. And current modeling system doesn't have any kind of accommodation for that, really. So what we are saying is that bias, one of the big ways to drive the bias out is by sampling these things differently, really, right? So really, that's, I think, one way to bias this system is by kind of creating that context of the communities into the models. And that's a little bit of the stuff that we have developed internally. And then last layer of protection is most of the clients that we work with, they will do this fair credit reporting or something like that when they're undergoing an exam, basically once in a year or once in a couple of years, really. When they use our system, on day one, they start getting this fair credit reporting. You can actually see it on a weekly basis. How are you doing compared to your original system? How are you doing by different protected classes? Right there is where you start seeing any signs of things that you need to do differently, and you correct the algorithms at the back end to align them suitably. So that's the last mile of control that we are able to give, and we create much higher, much faster visibility to those kind of outcomes using our system. And in fact, our clients have been on record saying that one of our clients, basically Floyd, was out saying that they are able to give a lot more credit using Scienaptic system to the native Indian communities, for example.
Interesting.
So we have a bunch of those kind of things that are now coming up. Our clients are giving us those kind of anecdotes.
Right. That's great. And that's one of the true breakthroughs, I think, with the technology that you've built. How is the model getting better? The thing that we talk about with AI is that it learns and it improves over time. And you've been now doing this for several years. How is your model getting better with time?
It's the way even the previous regime of modeling used to work. Even if you were not using the most latest cutting edge model, if you use more recent historic data to retrain and refit your models, you get the benefit of more recent trends coming into your model. It's the same principle industrialized in our world, where these models are retrained pretty much every month, basically. So our model of models is getting retrained every month. And as a result of that, these models in the specific client are getting smarter by the day as more and more applications pass through the system. That's just a very simple way this whole system works.
I want to talk about ChatGPT because it's everywhere in the press these days. I mean, there's always been some interest in AI, but not so much in the general population. Whereas now with ChatGPT and it's just on the mainstream press all the time, it feels like. As someone who's been in this for a while, what do you make of all this sudden interest caused by ChatGPT?
This is part of the evolution. These things can, frankly, there's no point even calling these things good or bad because this is just the nature of the system, really, right? So the world has suddenly found in ChatGPT a beautiful new toy. And I think everybody is kind of, trying to get engaged with that. It's a good thing over time. Hopefully, rational, balanced usage of those kind of technologies will be figured out. It'll progress as humanity. That's my sincere hope. The problem, though, as a practitioner who basically I started my career doing this stuff at college, basically when it was not even, we didn't used to even call it AI. There were words like pattern recognition or expert systems and things like that were used at that time. But from that time, I have been aware that there are two reactions that society generally has to advanced technology like this. One, I get depressed as a human being and say, oh my God, technology is really getting so smart. And in the singularity that is being forecasted for some time by the wiser folks, human beings actually have no role to play, really. They're just the puppets of technology, really. So that's one extreme. I get depressed as a result of that conclusion. Another is it's a new toy and I'll have frivolous uses of that toy. At Scienaptic, and I personally have been very focused. We have a clear worldview on this topic, which is all of this technology evolution is interesting, but the way you use a particular piece of technology in a specific use case and solve a real problem, which either has customers or individuals benefit from that, those are the use cases. That should be the quest that we should get onto. So when you think about ChatGPT specifically, there is a whole lot of beautiful things that can be imagined. If you think about it, it's basically about putting a natural language processing layer on top of a whole lot of things. So if you think about it, my world, we have underwriters, for example, that are very sophisticated in what works in their local communities, what kind of profiles work, what kind of profiles don't work. They don't necessarily have a lot of analytical, sophisticated data analysis kind of capability. So if they could work in terms of tuning the system below that we have built already, in between we bring in a ChatGPT layer, that can create a fantastic world where this person now who has 25 years of actual lending experience in Wyoming or in Denver and so forth, they can actually get all the power of data scientists at their behest, really, and they can actually use it to actually do good for their financial institution as well as to their members. Those are the kind of use cases that we are very excited about.
So does that mean you're looking to augment or add into your system some of this technology?
Absolutely. Yeah, absolutely. We think that there are broader augmentations that we have started actually just doing a little bit of work on around generative AI. So generative AI, again, is working on creating paintings and doing this natural language stuff and so forth, really. We also think that there is a large amount of structured data that can be very powerfully leveraged. So what is the generative AI equivalent of that, where you are actually working with classic data, structured data, but you are doing stuff that doesn't require very serious data science expertise, and you can create something very complex. So think of, you have the colors because of all the data. For example, somebody asked me to draw a picture, it'll be rubbish, basically. I have no idea. But with a tool like Dolly, I can create a whole lot of very sophisticated imagery that is roughly there in my head. And I get help from a software to do that. Can you do the same thing with actual data using the generative AI type profiles? So that's the kind of next level thing that I'm starting to think about.
That leads into my last question, actually, because let's just take this directly to the lending space, because we've seen, AI has been around the lending space for a long time. FICO talk about it as being used for decades, but there's been a lot of advances in the last few years. And so I'd love to sort of take us through, when you look at the lending space specifically, how do you see the AI piece or the technology that you're really bringing forth at Scienaptic? How do you see that evolving over the next 3 to 5 years?
So here is the nirvana of financial services and lending, in my view. The nirvana is that financial services companies can make infinite products, basically, right? So if you think about products, it's like I have a product that is 1% APR. I have a secured credit card where you have already put in the money, to a credit card that can get $100,000 credit limit, for example. And I have APRs that are ranging anywhere from 1% to 35% or whatever.
Mm-hmm.
How right now, if you go, most financial institutions will have like 4, 5, 10, 20 products, but there are millions of consumers, hundreds of millions of consumers, and they may all be a little bit different. So how do you use all this incoming data that you have, which is becoming richer and richer? And depending on the type of product that you offer to the client, they may have an appetite to provide you more information about them if they really need that product. So how do you manage, on one end, a infinite range of products that you can quickly customize? It's like Amazon recommendation engine, really. Mm-hmm. That is a lot more continuous than like I have 3 Chase cards, for example, right? Or something like that, really, right? So you can have a lot more continuous product on one hand. And then you have a customer who's basically saying, okay, provide me the credit or lending product when I need it without asking for any information, because I will give you a cover of information on me, and I'll tell you when, and you ask me when you need more information. So consumer permission type of data, really. I think that's the system. Technology is very much there to create that system. We have created our own technology at Scienaptic is capable of doing and supporting something like the vision that I'm laying out. I think the challenges are more process and practice challenges at the back. Challenges are more around regulators kind of getting ready for that kind of world and so forth. And that will be very interesting to see how it pans out over the next decade or so.
Right. Well, that's a whole other conversation. But you painted a really interesting picture there, Pankaj, where there's really just I could see the possibilities as you were talking there. So anyway, we have to leave it there. Always great to chat with you, Pankaj. Thanks again for coming back on the show.
Enjoyed the questions, Peter. Well thought out questions. Always enjoy the conversation with you. Thanks for having me.
If you like the show, please go ahead and give it a review on the podcast platform of your choice. And be sure to tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.